Assalamualaikum to Ms. Kim and all viewers. My name is Nurnajwarin binti Rahim from DPM6B. I am the first presenter.
Hai, Assalamualaikum warahmatullahi wabarakatuh. My name is Hazwani Binti Zulkefli. I am from DPM6B. I am second presenter.
Hai, Assalamualaikum warahmatullahi wabarakatuh. My name is Hannanah Hazirah binti Jasmi. I am from DPM6B and I'm the third presenter.
Hi, Assalamualaikum. My name is Fatihah binti Khairul. I am from DMK6B and I am the fourth presenter.
Hi, Assalamualaikum. My name is Adlina binti Husin from DPM6B and I am the last presenter in this group.
Hi, Assalamualaikum. Okay, before I start, I would like to inform you about our presentation may take a few minutes. So, please stay with us until the end of this video. Thank you. So, in my part, I'm going to talk about definition of shares. In Malaysia, certain people may misunderstood about the word of shares. They assume shares is expensive, shares is just only for large companies, and investing in shares can make them in losses. So, here is it. Shares is a unit of ownership of a company or finance assets. In order for the company to raise the capital, they may decide to sell shares to investors who then become equity shareholders in the business. So after that, shareholders then have the opportunity to earn dividends in return with profit distribution. Interesting, isn't it? But the dividends and profit distribution is depending on the company's share price and their overall performance. Okay, wait. Are you still confused? Now, how about this? Shares is a business. Why do I say shares is a business? This is because we can be part of the company without manage the company. Let's say we buy shares from company A and company A starts making profits from their business and attract more investors. When we buy shares from a company, it also means that we become a part of the business from that company. For example, we bought shares of Sarawak Consolidated Industry Berhad, and this company got the project continuously and started making a profit. So indirectly, the company shares started to rise after investors start buying the company shares. So by seeing the situation, investors are more confident to invest in this company. So our shares will increase. That's all from me. Now I will pass to the next presenter for more explanation about shares. Thank you.
Hai, Assalamualaikum warahmatullahi wabarakatuh. To Ms. Kim and to all viewers, my name is Hazwani Binti Zulkefli. I'm from DPM6B. Okay. So I would like to present about types of shares. Types of shares have two types, which is ordinary shares and preference shares. Okay. Actually, this type also used in Bursa Malaysia. Okay, ordinary share, also known as equity shares. This is the risk capital of a company. Ordinary shares give holders the right to vote in general meetings and to elect and dismiss directors. Okay, obligation of ownership are also conferred, and this may result in the loss of an investor's money if the company is unsuccessful. Ordinary shares usually form the bulk of company's capital and have no special rights over other shares. Okay, next is preference shares. Okay, these are shares which carry the right to dividend normally fixed, which ranks for payment before that of ordinary shareholders. Preference shares may be preferred as regards to distribution of assets upon dissolution of the company. Alright, under preference shares have two types, which is cumulative preference shares and convertible preference shares. Cumulative preference shares have the right to receive arrears on dividend before any dividend is paid to equity shareholders. For example, if the dividends on preference shares for the year 2017 and 2018 have not been paid due to market downturn, preferential shareholders are entitled to receive dividend for all preceding years in addition to the current one. Next, convertible preference shares. These shares are convertible. Shareholders can convert their preference shares into equity share at a specific period of time. However, the conversion of shares will need to be authorized by the Article of Association AOA of the company. That's all from me. Thank you. I will pass to the next presenter.
Thank you to Nurnajwarin and Hazwani. I'm going to continue about what are the important information of share. The first one is household net worth. Household net worth is a significant portion of household net worth is linked to the market value of stock and mutual fund, and this is create a wealthy effect. During bull market, people feel wealthy and business feel more confident. They spend and invest, which benefit the overall economy in terms of increases employment, sales, and corporate profit. Conversely, during falling market, individuals feel less wealthy and slow down their spending. This affects business confidence and individual spending, which can drive down stock price. Next, on important information is potential business influence. Shareholders have the right to participate and vote in annual general meeting. Small individual shareholder holding a few hundred shares may not be able to influence company. However, when these small investors join with the mutual fund and other institutional shareholders, they can influence corporate board and senior management to change strategy direction. Investors can influence corporate strategy by simply abandoning the share of underperforming company, thus driving share price down and forcing the board to make the necessary change. Healthy company mean healthy company which benefit for everybody. And the third one is share are a risky investment. This is because shares generally produce a better return than other assets. They carry more risk, mainly because they are more volatile in price. Using share as a short-term gamble can give some big win, but this strategy is fraught with danger. The number 4 for important information of share is share market investment is fun. The sheer range of things that company do is interesting and informative. It can add to our mindset for something new to learn. It's never too late to learn about share, and it's wonderful interest to give to our next generation about share. So, the last important information of share is share sometimes go up in price and sometimes also go down. If you buy share at the highest price and if the market falls, you maybe lose the money. But if you buy more share and the price market goes up, you will make money on the share market. The share also give benefit to yourself and it's depending to the current economy. That's all from me. I'm going to pass to the next presenter. Thank you.
So, I will continue about my part, which is modus operandi. The first step of modus operandi is you need to decide how you want to invest in stock market. So, there are several ways to approach stock investing. Okay. For the second step is choose an investing account. Generally speaking, to invest in shares or stocks, you need an investment account. For the hands-on types, this usually means a brokerage account. For those who would like a little help, opening an account through a robo-advisor is a sensible option. We break down both processes below. An important point, both brokers and robo-advisors allow you to open an account with very little money. For the third step is learn the difference
between investing in stock and funds. Stock investing doesn't have to be complicated. For most people, stock market investing means choosing among these two investment type, which is stock mutual fund or exchange traded funds and individual stock. Mutual funds let you purchase small pieces of many different stock in a single transaction. For individual stock, if you are after a specific company, you can buy a single share or a new shares as a way to dip your toe into the stock trading water. For the fourth step is set a budget for your own stock investment. The amount of money you need to buy an individual stock depends on how expensive the stock are or the share are. For the fifth step is focus on the long term. Stock investing is filled with intricate strategies and approaches. Yet some of the most successful investors have done little more than stick with stock market basics. That generally means using funds for the bulk of your portfolio. The best thing to do after you start investing in stock or mutual funds may be a little harder, unless you are trying to beat the odds and succeed at day trading. It is good to avoid the habit of compulsively checking how your stocks are doing several times a day, every day. For the last step is manage your stock portfolio. While fretting over daily fluctuations won't do much for your portfolio's health or your own, there will of course be times when you will need to check it on your stocks or other investment. If you follow the step above to buy mutual funds and individual stock over time, you will want to revisit your portfolio a few times a year to make sure it is still in line with your investment goals. That's all from me.
Okay, hi. My name is Adlina. I want to know. I will explain about advantage and risk of investing in share. Before that, when it comes to stock, all sort of definition come out. This stock is like gambling. This stock is like cheating. This stock like follow fit. So before investing, we need to know about the risk and advantage of investing in share. Okay. So firstly, I want to explain about advantage of investing in share. First is be your own boss. Second, liquidity. Third, learn about business. And last is flexible. Okay, the first point is for be your own boss means if we invest in unit trust, our money will be invested by the fund manager. In stock, we can plan stock, trading and monitor the volatility of stock. At the very least, we can appoint a qualified advisor to manage it. Okay, this is important. However, as Muslim, we must choose Sharia compliant stock. Okay. Next, about liquidity. Share can be liquidated at any time. If we want to sell land, house or car, it will take some time and have to go a related complicated process. Buyer want to see the condition of the house, discuss the price, and make the name change process. As for stock, it's just at your fingertip, and you need is a computer and internet. Want to be more sophisticated? You can even use a smartphone to buy and sell this stock. Next, about learn business. To success in stock, one of the necessary skill is to analyze the financial statement of a company. It is important to enable us to buy stock that will generate profit and not make mistakes in investing. Directly can learn business without having to be a CEO or business owner. Okay, for the last point is flexible. Okay, in stock, we don't have to work from 9 a.m. to 6 p.m. It can be done part-time and can generate passive income. At the same time, we can still able to make daily routine work. So don't worry, if students want to invest in share, they can almost do, but they must focus too with learning university. Okay, that's all from advantage in investing of shares. Okay, it's very exciting to invest in the stock market, and most exciting when the stock we buy goes up in price. This means we can get profit. So be patient. There is not generator of profit is investing in the stock market, while risk-free investing and confirming profits is get scheme cepat kaya. Know in advance the risk that await investor. Okay, for the risk in investing is capital loss, do not accept dividend, and the last is the company is not included in the Malaysia exchange. Okay, I will describe the risk. For capital loss, is a loss that arises from the difference between the selling price and the purchase price of shares. This loss occurs when an investor sells a stock lower than its purchase price. Investor or stock trading activities. Not all the time an investor make a profit, means capital gain, from the share he sell. Sometimes investors have to sell their share lower than their purchase price to avoid worse loss. Okay, for example, Fatah bought 1,000 units of ABCD share at 1 ringgit per unit, and then month later the share price dropped to 80 cents per unit. Fearing that the price will continue to fall, Fatah decided to sell the shares, so Fatah has lost 200 ringgit. Okay, second about risk is do not accept dividend. In stock investing, there are two types of profit. First, capital gain. Second is dividend income. Okay, for capital gain, buy at cheap price when the price goes up. For dividend income, buy no matter what the price. No need to wait for the price rise. Enough time to take dividend. Usually, company will only describe dividend if it make a profit. If a company incurs a loss, how do you describe the profit? Therefore, investors who accept dividend income need to understand that it's determined by the performance of the company. In addition, distribution of dividend is also decided by the majority shareholders. If the majority shareholders does not agree to distribute the dividend for some reason, even though the company is profitable, then the investor will not feel the dividend. And last is about the company is not included in the Malaysia exchange. Another risk faced by the investor is if the company's shares are removed from Bursa Malaysia. A public company on Bursa Malaysia with PN17 or GN3 status is a financially troubled company. The management is facing problems, and the most important indication is the company is fearing severe loss. Company listed in this trouble category will usually experience a drop in their share price, so be careful, okay? If you still have company stock and don't have time to sell, your money will be lost, so be careful. Okay, lastly, we as investors must understand exactly what profit and loss is customary in stock investing. A rational investor will look for a company that has a good business foundation. Unfortunately, many are more likely to listen to rumors and buy shares of companies that have poor fundamental or speculative in nature. Stocks are one way to generate income. It is not gambling or scheme cepat kaya. There is still a profit and loss situation. Attend class or seminar on stock to learn techniques for generating profit from stock. Make sure the seminar is organized by an academic party. Most important, choose Sharia complying stock. The last word from me is melabur tanpa ilmu umpama membaling dadu yang kalau ada nasib untung, tiadalah nasib ugi. Okay, that's all from our group. Thank you for your watching. Bye. Assalamualaikum.